New crop corn closed with a 3 in front of it for the first time in a long time. Now that we've gotten that out of the way, can we get a bounce? We'll talk about it with a farmer and an analyst coming up.
Live from the summit of Hump Day via Farm Journal Studios, this is AgriTalk. This afternoon we'll chat with Sherman Newlin from Risk Management Commodities. Directly following the news, Todd Bubba Horwitz from BubbaTrading.com. I'm handsome newsman Davis Michelson. And now, filling in for Chip, the pride of Chicago from Zaner Hedge, Ted Seifried.
Woo! What's up, buddy? How you doing?
How you doing? Oh, so good. Good.
Is this 2 weeks in a row, or am I like totally spacing? And that was the one that I did a Wednesday either last week or the week before. I just
like this whole month is just sort of a blur to me. It could have been. It might have been yesterday for all I know. Whatever. You could say anything.
It might have been. No, I think I was at Shaw's Crab House last night or yesterday at this time.
Oh, no kidding. Is that Wallace
Yeah,
Shaw's Crab House? Inconceivable.
I don't know.
Oh,
no, nice. Yeah, no, I had a friend that was in town, and we decided for some Shaws. It was good. It was really good. Yeah,
that sounds like a great idea.
Nice summer Chicago activities, right? I don't live in the city. I not in the office every day anymore. I work from home quite a lot, actually. But it is nice to have access to a brief few hours, like in the city, every once in a while. So
sure,
it's not terrible.
Mm-hmm.
But especially, I mean, when it's nice out. I mean, in the wintertime, no, thank you. But yes, in the summer, it's nice out. People are out and about. It's you get this sort of false sense of security of it being safe. And then,
it'll lull you right into complacency. Yeah, it'll happen. Happen.
Yeah.
So okay, just hold on. We've got two guests today because you mentioned we're talking with a producer and an analyst. I only see the one here.
Nope, just the one, because Sherman is both. As you guys know, if you listen to the AM show, he's on the Farmer Forum quite often because, Sherman's a farmer.
He's
but
a keeper.
Also Sherman, he is. But also Sherman is a broker analyst as well, so he can talk about crops. He can talk about the markets. He can talk. I'll tell you that much. He does like to talk. So
that's good.
We've got a lot of stuff to cover. Again, I just kind of a Debbie Downer day with December corn closing with that 3 in front of it. I mean, it's just I think a few months ago, a lot of people would have said that just can't happen. But here we are, right? So now the question is, where do we go from here? And so I don't know. We're kind of looking for some good news. Maybe Sherman has some, maybe he doesn't. We do have export sales tomorrow. I wonder if something comes out of that, but who knows, man.
Yeah.
It's
I got some news here for you.
July was tough. Yes. Go ahead. Let's go with the news.
You bet. Well, early weakness in the U.S. dollar had wheat under pressure for much of the day session. Rains across much of Australia this month have improved wheat production prospects there. Ukraine reports it exported 3.4 million metric tons of grain during July. That's up sharply from 2.2 million tons during the same month last year. This is based on Ag Ministry data. Here at home, December SRW broke through initial support at 542, but bounced to register a close on the plus side of unchanged, I think. Yes, we're still higher here. Man, it was tough getting these in. I've got December hard red winter wheat down 1/2 cent to 565 3/4. December soft red wheat up 3 cents, 552 even. December spring wheat, down 2 1/4 to 601 even.
Yeah, it actually wasn't the worst day for wheat. It was an inside trading day and we closed positive. Is this wheat trying to find a near-term bottom even when corn was down 5 1/4? I don't know. Maybe.
Yeah. Well, corn futures faced follow-through selling today, pressing prices to the lowest level since December 2020. USDA reported daily corn sales of 104,000 metric tons to unknown destinations for 24-25. Ethanol production averaged a record 1.109 million barrels per day during the weekend of July 26, up 1.3% from the previous week. And Ted, that's 3.9% above the same period last year. Ethanol stocks did increase 250,000 barrels to 23.973 million barrels. December corn futures dipped below psychological $4 in the waning moments of trade. September corn futures 6 cents lower at 382 3/4. December corn declined 5 1/4 cents to 399 3/4. SAS close. March corn futures closed 4 1/2 cents lower at 415 3/4. Ted, I was watching my chart screen on that December corn contract, and we almost bounced and popped above $4 for the close. But then at the last possible second, SAS closed down 1/4 cent below $4. What do you make of it?
Horseshoes and hand grenades, brother. I don't know. I've said enough about corn for now.
Very good. Very good. Well, soybean futures broke a 3-day losing streak on improving U.S. production prospects and lackluster demand. China's soybean crush volume in the weekend of July 26 rose from the previous week, while the country's soy meal stocks reached a record high. November soybeans dropped below support at Monday's low of 10.18 for a short time before recovering into the close. September beans were 3 1/2 cents higher at 10.14 1/2. Novi beans gained 1 1/4 cent to 10.22 1/2. January beans closed at 10.39 1/2. That's up 1 1/2 cents today, Ted.
Yeah, it had been a really rough 3 trade sessions coming into today for soybeans. That August contract really gave up over $1 in those 3 sessions, or since last week's high. But now that it's in first notice day, I think we're going to see it, or at least an attempted stabilization. Today was that day. I'm curious about that September contract. We've had big inverses between July and November, then August and November. We're currently at a carry from Sep to Nov. Are we going to build that into a inverse, and would that support the market if we do? So yeah, I think today was a step in the right direction for soybeans.
Very good. Well, it looks like we've got Todd Bubba Horwitz standing by. You want to go there?
Yeah, let's do that. Todd, buddy, how's it going, man? What'd you feel about today?
What's up, Ted? Well, listen, we got Jerome Powell, who's trying to do his best to act as a guy who talks in circles and says nothing. We got grains that still look like they're in trouble. It's unfortunate. Crude oil is going through the roof, so that's not a good thing for our farming friends. Not a lot of good news to report here because they keep telling us how good the economy is, and I don't see it. I don't know about you, but I don't see it.
No, I don't really see it either. I got to be honest. And, with a big risk-on day, crude oil sharply higher, S&P sharply higher, investors excited about getting into things. They certainly didn't feel like grains were those things to be getting into, it seems like. So I don't know. What do you make of that?
They haven't felt like getting into grains for so long. I can't believe they're not involved in the inflation trade. At some point, there's a real big disconnect between wholesale and what happens at retail, and that's a major problem. And I think there's some funny business going on here, and it just doesn't make a lot of sense. That it's a scary situation, and corn now down to 382. Just can't seem to get up. Wheat near $5. I mean, those prices are almost ridiculous.
Yeah, they really are. It's unfathomable, right? I mean, these are not prices that we had expected to see, or at least most people hadn't been talking about, just even a couple months ago. So, yep, it's sombering. It's a wake up call. So, yeah. Well, Bubba, man, appreciate you as always. You have a wonderful rest of your day. Out and enjoy.
Appreciate it. Thanks, Ted.
Absolutely, buddy. All right, everybody else. This is AgriTalk. I'm Ted Seifried, and when we come back, we're going to be talking to Sherman Newlin of Commodity Risk Management.
On your favorite radio station or your preferred digital device, AgriTalk is live every weekday.
Welcome back to AgriTalk, everybody. My name is Ted Seifried of Zaner Hedge, and I am filling in for Chip here on could be more wonderful Wednesday, I'm going to say. But, at least we had some green on the board today. I'm going to say that maybe that's the start of something. I don't know. That's certainly the hope. Let's get some good export sales tomorrow and see if we can get some follow through. In the meantime, I incorrectly introduced Sherman Newlin at the end of the first segment. I missed, it's risk management commodities, not commodities risk management. My bad. My apologies to Sherman. But again, risk management commodities. Look it up, everybody. Yeah. So in the meantime, without further ado, we have Sherman Newlin of, again, Risk Management Commodities. Sherman is a farmer. He's a friend, and he's also a analyst and broker. So we've got a lot to talk about today. Sherman, how's everything going, man?
Oh, not too bad. We got another half-inch of rain a while ago that came through. That gives us about 2 inches for the week. So, things are looking pretty good down here in southern Illinois as far as the crops go. They look like we could have a really big crop, especially if we could get another rain or two in August. And August weather forecast looks to be pretty good. So
yeah, in Sherman, it occurs to me that we were talking, I don't know, maybe it was like a month ago, and you were getting fairly concerned. It's hot, dry, burning
right.
up, and so
yeah.
Okay.
I mean, yeah, the whole month of June. We had a good spring, had a really nice spring, got stuff planted. I mean, we were kind of held out through the month of May. I mean, planting window was spread out, but then we hit dry weather in June, and we hit some really hot temperatures. And then we got some rain around the 4th of July, and I thought maybe that, kind of healed us up. And I've been out in the fields looking at some of the corn here lately, and I mean, it's not a lot of corn, but we got a couple. There's some years that's got an inch or two of tip back where we didn't pollinate because of that heat and dryness in June. So.
Yeah.
But, for the most part, it's not a lot, but for the most part, stuff is looking like we're going to have a big crop.
What do you think we're going to see on Crop Tour?
I think Illinois is going to be big for sure. Indiana, northern parts of Indiana is going to be, maybe a little concerning, but heart of Indiana is going to look really good. Iowa, that east side of Iowa, I think is going to be really big. Nebraska, I don't know. I think it'll be good. I think it'll be better than last year. I think, we're going to see some problems in Minnesota, in that southern Minnesota part. I mean, those poor guys, they've had way too much rain. So that's going to be something we're going to see. And in South Dakota, I don't know. I haven't heard a lot about South Dakota, but I think that southeast side that we kind of go through is probably going to be pretty good.
I've heard some fairly mixed things about that southeast South Dakota. Hail damage.
Yeah.
They've had some spots that have gotten way too much rain too. I should have led with this. Sherman is a veteran of Crop Tour. I think you've gone west every single time, right? And then is this your eighth or ninth year coming?
I think it's my 8th year.
Yeah.
I think it's my 8th year. Yeah.
Yeah, I'm going west as well, so we'll be hanging out on the western leg this year, buddy. But
I'm sure we'll be riding together at least one day.
Yeah, hoping so for sure. And so, just for those who don't know, on the western leg of the tour, day one is South Dakota. So, as Sherman just mentioned, and myself included, I'm very curious to see what we will see on day one, and then we get into Nebraska. We're in Nebraska for 2 days, and I think the second day that we're in Nebraska, where we're skirting through mostly irrigated, obviously is probably going to look really pretty good. And then day 3, which will be in western Iowa, I think is going to be pretty good. And then the big question mark is what happens in Minnesota, right? And so we'll see what that looks like. I agree with you. I mean, I worry about our friends in like Blue Earth. I'm waterlogged and everything like that. We'll see. But I think the West is where the interesting thing is going to be on Crop Tour this year, don't you?
Oh yeah. I mean, there's some trouble in parts of Ohio, but I think they're going to be starting to get some rain. Now, whether or not it's in time for some of it or not, but yeah, the story is going to be again, where they've got flooded out. Where they're prevent plant acres, the hail, obviously. The market's not getting a whole lot of attention on those things, or they've kind of glossed over them since so many areas have gotten so much rain. And the crop ratings are pretty good, and it just, there's just going to be some big yields. I'm just flat telling you. I mean, I'm doing some yield checks, and we could have record crop for our area, and I think you'll see some numbers in Illinois push 300 for fields anyway.
Yeah. All right. So everybody keep in mind this is before we do Crop Tour, and we go and see things for ourselves. But at least at this point, in your mind, Sherman, expectation wise, are we looking at a record national average yield? Are we looking at something close to the USDA's trend line? Are we looking at something that actually might be better than the USDA's trend line? Where do you think what are your sort of early expectations for that yield?
I may get some hate mail for this, but I think it's going to be above trend line. I mean, okay. I think we're, yeah. I mean, I might be wrong. But where does it come fall? I mean, it's definitely bigger than last year, in my opinion. Are we over 182, 183? I mean, there's some throwing bigger numbers out there, and I'm not in that category yet. So, yeah, we're going to have a big yield. I really think we're going to have, nationwide, we're going to probably see a record, but then we fall back, what are the acres, right? I mean, do we lose some, harvested acres, or do we have some prevent plant acres? And that's going to be incorporated, some of that in the WASDE report, next week. So,
right. Yes, because the USDA has now started to do that in August instead of September. So that could be a bit of an offsetting factor potentially, right? And that was the time where analysts we're all trying to put together our numbers for that WASDE report and what our expectations are for that. But what do you think the market has factored in, or what do you think the market's currently trading? We talk about that. What is the market factoring in at this point? You think it's factoring in something better than 182 for corn?
I don't think so. I mean, maybe some guys are thinking that. But the algorithms, they just keep selling this thing. I mean, we closed below $4 today. It looks to me like, unless we bounce back up here pretty quickly, we're probably heading into the low 380s, kind of where September's at. And that's kind of been, if you go back, look over the past years, that 380 was kind of an area where we topped out at. So maybe that'll be some support. I mean, some are thinking we can go down to 325. I hope we don't. I'm not in that camp yet, but there's a lot of old crop corn that's got to come to market. There's just going to be a lot of bushels out there. So the market, until we can find a reason to change the trend, it's probably going to be, still sell rallies. I guess I don't think we'll see something in the WASDE report that's going to be bullish enough to change the trend and get the funds to really cover. Not yet, because of the weather. Sure does look good, and looks like the yield's not going to be getting a whole lot smaller. Unless you're in an area where you're getting too much rain. I guess I was, as far as like bean ratings, I was kind of surprised that on Illinois bean ratings that they dropped that last week. But I would contribute that to the hurricane that came up, so probably some too much rain in certain areas. Yeah. But other than that, I think the crop looks like it's good to go.
So we'll get to soybeans, I think, a little bit more in the next segment. But with everything you just said, and putting your risk management hat on rather than the producer hat, what are you telling guys? Like, what do you think guys should be doing with this right now? Let's say they haven't done a whole lot.
And that's probably a whole lot of people, right?
Yeah.
But I don't think there's a whole lot of new crop selling has been done. Right now, if you haven't done anything, you got to chalk the wheels, right? I mean, you got to do something. Buy some put options here, buy some 370s, 380s, 390s. They don't cost a whole lot, but if this market does continue to slide and you get down to 325, you got a problem. If you got to move bushels at harvest, I'd lock in basis, because I could see basis getting pretty wide if we, jam this thing up, get the elevators full. You can see basis go pretty wide, at least for a while. So I'd be looking at doing some basis contracts, if nothing else. Do some of that.
So you bring up a very good point, and we only have about a minute left, but you bring up a very good point. Usually when we have prices or flat prices, the board going lower, a lot of times that means better basis. Basis improves on a lower board price. But we're in a very specific situation where we have, at least as of last quarterly grain stocks report, we have a full carryover and a half, 3 billion bushels sitting on farm still that has to move into commercial storage at some point. And then a big, potentially record harvest coming in on top of that. This might not be one of those times where basis improves with lower prices. And I think guys really, really need to be aware of that and the rationale and reasoning behind it. All right. We're talking to Sherman Newlin, providing wonderful and excellent insight. We're going to come back and do that again in the next segment. So everybody, come on back to AgriTalk.
6:30.
Let's go to the markets page at profarmer.com and check today's closes, where December HRW wheat futures were 1/2 cent lower at 5.65 3/4. December soft red wheat up 3 cents, 5.52 even. September corn futures were 6 cents lower at 3.82 3/4. December corn declined 5 1/4 cents to 3.99 3/4. SAS close. September beans 3 1/2 cents higher at 10.14 1/2. November beans gained 1 1/4 cent to 10.22 1/2. December cotton today 56 points lower, 68.99. On your livestocks, August fats today 57 1/2 lower, 187.12 1/2. August feeders 27 1/2 cents higher at 257.25. And August lean hogs today $1.07 1/2 higher, 92.27 1/2. Get more market news every market day. Visit tryprofarmer.com.
Do it.
Opinions expressed on AgriTalk do not necessarily reflect the views of Farm Journal Broadcasting, affiliate stations, or sponsors. When news breaks, the news makers talk about it on AgriTalk with Chip Flory.
Welcome back to AgriTalk, everybody. My name is Ted Seifried. I'm from Zaner Hedge, and it is Wednesday. It's the day we've all been hoping we didn't see, and that's December corn closing with a 3 in front of it. Sherman and I have just been talking a lot about whether, is that it or not? And again, I think the answer to that is probably not. But that doesn't mean that we couldn't see corn trading back above $4 somewhere further on down the line. We're going to put it in harvest lows. And then hopefully we get some sort of a post-harvest bounce this year. And I'm going to kind of tie this in to our transition towards soybeans. Not completely, I guess, done with corn yet, but Sherman, when we talk about harvest lows, I think traditionally, when I was first learning this business, 18 years ago, however long ago that was, somebody once told me that harvest lows typically come when we're about 60 to 70% harvested. And then, I started to notice something that there's years where that doesn't happen. We end up putting in harvest lows well before that. And, I was wondering what your thoughts on harvest lows and when we might see them, and then kind of why.
You're right. I've been doing this for a long time. Been farming for a long time too. Harvest. We could see them in earlier if we could get, the bearishness or the heavy selling into this market, and get down there sooner rather than later, right? Hit that 380 mark or something. If we're got to go there, get to those areas and get it over with. Maybe we can run out of sellers. And the other part is the funds are, really, really short. That doesn't mean they can't continue to add, but at some point we're going to run out of sellers, right? But the harvest is going to be drawn out this year because planting was spread out. We're going to be spread out down here. So if anything, that's going to help maybe with some of this where we don't have that huge slug of corn all at once. Because planting was, spread out 6 weeks for us. And I know it was a lot of other areas. So if anything, I think that can maybe help us put in some sort of harvest lows. But you're right. A lot of times we'll put in a harvest low around that 1st of October. So time frame. So go ahead.
So other times I feel like we've put the harvest lows in kind of like at the end of August. And I feel like those years are years where we have a whole lot of we have a big carryover. We've got a lot of old crop corn that needs to move right before harvest. And I wonder if that's one of these years. Like, I wonder if we're going to see earlier harvest lows. Now, they might be lower than what most of us want to see, but I'm wondering if we're going to see earlier harvest lows and then a fairly legitimate post-harvest recovery. Now, I think that's going to be slow coming because of what you said, right? The fact that we've got, a wide variance of when we were planted, and I think harvest could be drawn out. So there will be kind of continuing pressure here and there. But I think once we get past, the first 20, 30% of harvest, guys are going to really try to hold on to as much as they have. I mean, we don't love these prices, and I don't think we'll really love them when we get into harvest, unless there's some sort of big damage event, derecho or frost or something like that.
Right.
But then I do feel like into December, there's a good chance for recovery. That's my best feel right now. I mean, we're trying to predict your futures hard, and we're a long ways out, but that's kind of,
and somewhere in here, we're hoping China starts coming in and buy,
yeah.
Whether that's going to happen or not, I mean, they typically will start buying stuff in the fall. They haven't bought jack squat yet, so I'm not sure they're going to buy a whole lot, but maybe they will. So we have that out there. And then, like you said, by the time we get to December, we're going to be seeing how the South American weather situation is going to be, going down there. And, maybe they'll have some sort of, drought or difficulties with something down that way that'll start to produce, some sort of bounce. But eventually the funds, will want to cover, and that'll create something. And maybe we can see some, somebody come in, some countries or end users step up here and start buying some of this corn at these cheaper prices. So we know, you also, you got inflation. How low do we really have to go based off where inflation's at? Is $4 corn enough? I would hope so, but it sure doesn't act like it wants to yet. So.
All right, so I'm going to touch on inflation in the next segment because that's been a bit of a theme. Bubba mentioned that earlier, but before we get to that, just kind of stick with the thing here. Soybeans. I've been fascinated with the old crop, new crop spreads. The July-November spread at one point got to like 74-cent inverse. The August-November spread at one point got to 62-cent inverse. Inverses are not something that is very typical when you have bear markets. And I think it's pretty undeniable that we've been in a bear market in soybeans really since, May, and yet you've had this kind of weird inverse that's existed in soybeans. And then just, in the past week, as we've had that August contract getting close to first notice day, that inverse really collapsed. It went from, 62 cents, like 10 trade sessions ago for a high, down to like 4 cents yesterday. We gave all of that back. Do you follow spreads that much? I mean, what does that tell you? Why did we have such a strong inverse in a bear market?
I think a lot of type farmer holding. I think end users have been needing soybeans. I mean, right now we're just locally, we got a 5 over cash for cash soybeans. So they're wanting beans from old crop, and guys are just hanging on to it. And maybe it's because they're hanging on to their corn too. So, they want to have something that's going to be worth more. But I think it's just the local need, or the end users, the crushers wanting to, need the soybeans, and their guys are holding on to them, and they're going to have to bid up for it. And I think that's been the case as much as anything, especially when you look at the basis. Between basis old crop and new crop, we're 40 under for new crop, so that's really bad. But that's where we've been all summer. So that's our typical basis this time of year.
Okay. So then after this big slide that we saw, which was really led by that August contract capitulating underneath the pressure of that spread, it took November with it, not quite as dramatically. But now that we've got that August in first notice date, do you think there's any chance that we get any sort of, relief rally, recovery rally here?
We could. I mean, the market's definitely oversold enough. We could see something. I think you're right. I think that's been part of what's been going on here. But at the same time, we're getting rains across the country. I mean, I've been out looking at my soybeans, and I've been talking to guys. We could be looking at a big bean crop out here. So we could probably go, over what USDA has been saying, if we can get a few more rains on the crop here. So I don't know. I mean, we broke the new lows today. We, poked the nose down there in that November contract, closed back above it. That's good, but we've done that a couple, 3 times, and we kind of like corn. We've done it a couple, 3 times in corn, but it didn't hold today. So unless something really changes, I wouldn't be surprised if we don't take that low out again and maybe see what's down below $10. I mean, I think part of the reason we're up today is the bean oil was up, and I think that was one factor. Bean oil's come really oversold. And you got a really good rally in the crude oil market. We're up $3.70 today. So that may correlate, back to the bean oil, the fuel blend and all that stuff. So, for what it's worth, maybe grasping at straws, but maybe we can get something going there a little bit, but I don't have a lot of hope for beans to rally a lot.
So just to kind of play a little bit of devil's advocate though, Sherman, you have a day where right now the S&P is up 92 points. Crude oil, as you said, up $3.41 in the October contract. There's a lot of risk on happening today. People are getting in and they're getting long in commodities and equities. Yet we didn't see any sort of benefit from that in grains from mostly. You mentioned soybean oil, but December soybean oil was only up 42 cents. I mean, that seems like really nothing. So, I mean, are these guys ever going to turn to say, well, at the very least, maybe we should cover some of our shorts there in grains, or are they just very happy being short right now?
Well, they seem to be very happy. Nothing seems to really scare them. But if something would break out in the Middle East, if this would escalate, I think you maybe could see some nervousness that, for whatever reason, that they may say, okay, maybe, we pressed this far enough right now, and they want to take their money and run. But like you said, you're right. It is risk on. You got gold up $40. You got the S&P's up a lot. Silver's up, crude's up. So it's disappointing, to see the corn market do what it did, and beans only eke out a couple, 3 cents here and there, even though we do have a little bit of a weaker dollar as well. So I don't know. There's a lot of things going on, but they sure don't act like they want to rally this thing too hard yet. Just because I think we got a big crop coming out there.
Yeah, we're really focused on the individual market fundamentals of grains, and there's just not a whole lot of excitement about that, at least. Okay, so we're man, time flies when you're having fun. We've got about a minute left, but I got to ask you the same question about soybeans that we did about corn, and that is, for guys that don't have a whole lot done right now, what are your suggestions for beans with about 30 seconds?
I think you got to, buy some put options. You got to chalk the wheels. Same thing we did in corn. You can buy some $10 puts, some 10.20 puts, or even 9.80 puts. You have to chalk the wheels. There's no real carry out there to sell. There's some. You can go out there and do some HCAs or something. But I would, if nothing else, I'd be buying something on paper, buying some protection with some put options.
Real quick, which month?
You can go November or even to the March.
Okay. All right. Sherman, you're wonderful as always. I appreciate you. Thank you for coming on and being our guest today. Great job, buddy. That's Sherman Newlin, everybody from Risk Management Commodities. When we come back, Davis and I are going to chat about markets. So everybody, come on back to AgriTalk.
I don't know what you're thinking. So call us at 855-4TALK-AG and tell us what's on your mind. I don't know if we have time for that or not, because I've got Ted Seifried here. It's your pal Davis Michelson here, but I have relinquished the big green leafy microphone to the pride of Chicago himself, Mr. Ted Seifried from Zaner Hedge. Ted, just real quick, because we never have time for this at the end of the show. Thanks so much for stepping in and for all the times that you step in.
Thanks, man.
We really
appreciate
I really
enjoy doing it. And
you do a great job.
Thank you. I appreciate that. I enjoy it. You're right. And so it's good to hear. I appreciate your comments there, because you want to be good at things that you enjoy doing, right? So
ultimately, yes. Well, we don't all have that. We don't all have the chance to express something that we're good at. This is something that you're doing outside of your work. You're taking time out of your day to do this. It's a good thing you're good at it.
Yeah.
It helps us a great deal that you're very good at this.
Yeah, again, I don't think you guys would ask me if I wasn't. So, I appreciate that. And also, I'm also going to say, there was a time, and we're talking a few years ago, where you guys didn't have a whole lot of, guest hosts. And I was doing it quite a lot, which I like doing, but I also really enjoy having, Michelle come in and doing it yourself, man. You've really grown into the role. You're great.
Maybe getting there one.
I mean,
so
Now, come on.
You're very kind.
You really do a great job.
Well, thank you.
So it's fun to still be, a part of it, but it's also fun to, listen to the other voices that come in and do a really fantastic job too. So I appreciate you, man. Thank you.
Yeah. Well, you're good stuff all day long. Good talk with Sherman Newlin. There was a lot in there. I feel like, see what I want to get to inflation. I want to talk to you about strategy. But first, kind of something that I think maybe needs just a little bit more attention. I've been watching the soybean spreads. Currently, I don't know if we can do anything with the August 1028, we'll call it. Out to the March, we're at 1054, but the SEPT at 1014. Is there?
Yeah, right.
What? I feel like I'm seeing something there. I'm just not sure what.
So I asked Sherman about that a little bit, and he was, I think, dead on. Right. We've had this sort of wild inverse. It's very rare where you have a bear market and yet you have your front months trading at a premium to your back months. We call that an inverse, right? A normal grain market, if it's trading sideways, is your front months are cheaper than your back months because of cost of carry, insurance, all that. Right. The cost of carry is what we call a carry. That's a normal market. In bull markets, your front months are higher than the back months because the market wants supply now. In bear markets, usually you have a wide carry because the market's trying to say, hey, hold back on the supplies. We don't need it right now. Store them, try to capture that carry. Well, we haven't had that carry in this market. It's been a wild inverse, and that's because I think guys just have been very reluctant to sell cash soybeans, hoping for that rally, that weather rally to $13 that we've enjoyed the last couple of years. But then here recently, as we've started, looking at a more promising forecast for August, you've seen a lot of those soybeans come to town. You've seen a lot of those old crop soybeans getting priced out, and that's hitting the board. You've also seen your end user, domestic end user, say, you know what, actually, we don't really need a ton of soybeans right now, or at least not till new crops. So that inverse has just completely fallen apart in like the last 4 trade sessions, to the point where now you have September, the SEP-NOV spread at a carry. That's the first carry that we've seen really in the life of the November beans, or at least let's say in this calendar year. So now that we have a carry, the question is going to be, we had to see a flurry of sales as guys were making decisions of what to do on contracts sold against the August beans, or contracts against the August beans. Now that that's passed and we've got August beans into delivery period, are guys going to get real tight, hoping for that August weather rally again? Or can we see that September contract go to that inverse or start trading at a premium to the November? And I think that's a very interesting way to maybe get some risk management on, because if you put that spread on, you buy the September, sell the November, ultimately you're short November. So you're short new crop, like you kind of need to do that at some point, right? But if we do get a shorter term or midterm rally here, which I think is possible, then you can actually gain on the September. You could use that as sort of replacement for sales that have been previously made at prices you don't love. And then when you have a profit in September, you take that off, and that leaves you with your short November hedge, right? So it's something I've been talking about with clients. It's an interesting concept. I've not done a whole lot of it yet. But anyways, it's something that it's in the conversation right now. And I've been very curious as to why the spread's been doing what it was, trying to understand it. I will say the capitulation or the complete collapse of that spread, that August-November spread in the last couple of days made a lot of sense to me. But now I'm wondering if the September is going to try to do the same. So that's my drawn out long story about those spreads.
No, that was good.
You mentioned
inflation.
Good. We could talk about that.
I was going to say, speaking of September, some people think we're going to see the rates move in September.
Yeah, inflation, right? And so I get it. I hear people, Bubba and Sherman mentioned it. A lot of guys are talking about, well, inflation should push raw commodities higher. Okay, the problem that I have with that is that, if you're in higher level economics classes in college or post-grad or something like that, and you really dig into inflation has this tendency to happen in 3 ways.
Oh, and you'll have to tune in next time to find out what those three ways are. Ted, did we lose you? Joe Stackler, did we lose Ted Seifried just right at the moment of truth?
I see him still connected, but I don't hear him. I'm hanging on to know what those three ways are.
I know that there are 50 ways to leave your lover. Shoot. All right. Well, let's see here. Oh, Ted.
Hey,
Ted.
Did you guys lose?
There
me?
he is.
Oh no.
We did. What are the three things? Quick.
Yeah. Inflation. Sorry. Raw commodities first, then the things that we buy at the store, and then your final tertiary wave of inflation is in labor. We're in that last one. It doesn't necessarily mean that commodity prices have to go higher. That's the very short story on that, based on upper level economic theories. Man, wow, that went fast. Sorry I lost you.
No.
Yeah.
Take us home.
All right, everybody. My name's Ted Seifried, filling in for Chip. I've had a great time here on AgriTalk. Thanks for having me, guys. Tomorrow, Michelle Rook's coming back. So, have a great day.